This is the Friday, April 10, 2020 version of the Market Plus segment. Joining us now, Tomm Pfitzenmaier. Tom, before you say hello, it's just nice to see a human face because last week between you and me was a computer screen and I saw the four analysts. How is your television consuming gone? Have you gotten used to seeing all these things on the computer?
Kind of. I mean, every interview you see, that's the way it is. I mean, that's part of the reason I wanted to come in here today, because, you know, I'm so used to looking at it's kind of where it's out of focus and people are looking kind of grim. And
you look good.
It's kind of nice to have a smiling face across from you.
Well, unfortunately, as we just discussed in the full program, there wasn't a lot to smile about.
No,
but let's start with cotton in the sense they actually put on 2 to 3 good days, positive days. Is that just we're getting ready to move lower, or is there something changed in that market?
Well, number one, it got, like a lot of these markets, got very, very oversold and was due for a correction. So that's part of what's going on in the cotton market. I think there's still a feeling that maybe some acreage shifting ended up happening, or that some of those cotton acres are going to end up going to beans. That was a little bit supportive. I think China supposedly getting back going again, and people moving around and their industries firing up, I think gives some optimism that maybe the demand will be a little better. Although, you know, a lot of us in the U.S. are wearing jeans and shirts and stuff, and a lot of that's, the stores are closed, and so that cotton products in the U.S. aren't moving. So I think the upside here is somewhat limited, probably in the $60, maybe low 60s. Beyond that, it's going to be tough, I think, for the cotton market.
What you started with brings me to a point that could fit for any of the markets. Are we to the old adage of low prices are curing low prices? Pick a market. Could be any of them.
Well, I mean, it will. That's ultimately what will happen.
It's a matter of how low?
Yeah, it's easy. Yeah, I mean, that's easy to say. It's how low and how long before that happens, because a lot of this stuff, there's a lot of product that's got to get cleared out before that can happen. So something's going to have to happen to reduce the production. I'm talking mainly in livestock markets and grain markets as far as that goes, before we're going to work our way out of this. Because I don't see any big demand thing, at least on the horizon, to make that happen.
All right. Well, you just touched on a couple of points on the questions that we have received via Twitter, Facebook, and Instagram, and we always thank you for those. So let's start with Brad in Hurley, South Dakota. He's asking on Twitter, with economies printing billions to trillions of dollars, will that move speculative capital into commodities? And how soon is inflation on the horizon? You have to play an economist now.
That's a good question. You can't help but think in the long run, all this is inflationary. In the short run, I'm not sure it is. I guess that was kind of a two-sided answer, but that's the way I perceive it anyway. Then in the short run, it's not going to be inflationary, but in longer term, it will. Now, what's my definition of longer term, I guess, would be at least nine months to a year before that component of all that we're doing comes together to be inflationary.
Well, do you see the darkest days being the month of March and April, which is going to be its own year, I've heard? It just seems like they have just been long. Is the short term are we just down for all of April?
I think so. I think we're going to be lucky to not be down into early May. So it's just going to take a while to get everybody comfortable back moving around again and safe doing so. And I don't know that there's been some genuine fear on people's part that it's going to take a while to get everybody comfortable doing that again.
Well, Wuhan, finally, and it's 11 million people were allowed to move around freely in the city. That's where this virus started. So the question is, if China is starting to come back, and Matt in Amherst, Wisconsin, he's like, so is this China buying dealio going to happen or what? I mean, we've seen some of the buying. That's what we saw in the last 10 days to 14 days in the market. They're getting a heck of a good deal. Are they going to just keep buying?
I wouldn't be surprised to see them continue to buy some corn right along. I really think they're going to play us in the bean market. You know, they've got good supplies out of Brazil. They've got plenty of beans moving that way. I think they can very easily be content to sit and wait and see how the summer goes, and then start buying, because there's no real time limit on that. And at least we're not even going to start talking about it until July and August. So we could very easily see bean prices drift back lower by that time, especially if the crop goes well and we plant plenty of them. So I think it'll happen. Maybe not quite to the extent we'd thought it would 2 months ago, but I think that demand will come around. It just may not come for a while, on beans anyway.
On beans. All right, I want to talk about just an update on corn. North Dakota, they resurveyed the acres this week on harvested. They're now 81% complete, up from 75% last week. It's been depressing, if you're up in North Dakota, to look at that corn crop still in the field. We've seen the videos, and it's depressing in a number of fronts, and this isn't really anything to kind of joke about, but it is bringing up a point. Brian in Thompson, North Dakota, is asking us, do I just schedule my farm auction now before we get a crop in the ground, or just wait till fall when we lose even more money? I mean, it's hard to turn that boat around right now, but at some point, when do you wave the white flag?
That's gonna be an individual decision. Who knows? I mean, there's people that sold a ton of corn and got a good price through the winter that probably can ride this out pretty nicely. If you didn't do that, or you didn't have a crop, if crop insurance isn't supporting you like you'd hoped it might, then maybe you need to wave the white flag. That's such an individual case and individual situation. I mean, a lot of people have talked about the crop losses up in that part of the country, and it's really hard to quantify. And I don't know that the USDA is going to know or have a handle on that until the September stocks report. So it's interesting to talk about. It's terrible if it's your farm that you're dealing with, but in terms of the big market, big picture, it's kind of hard to quantify.
All right, we'll move east across the Red River into the other part of the valley towards Crookston, Minnesota with Tim. He's asking, will there be a spring high in grain prices this year, or has coronavirus put a kibosh on the seasonal rally? You kind of talked a little bit about that in the show.
There's not going to be a seasonal rally that amounts to much without weather problems. I think this ethanol situation is really a mess, especially if you've got cash corn that you didn't get sold on that good basis through the winter. You kind of missed your opportunity there. And I guess I'm not very optimistic that I just think there will be plenty of corn available to sell on any little pop that comes along here that's going to keep the pops from not amounting to much. So,
because we're going to flood the pops, you're saying, with too much selling?
Right.
Okay.
That would be my perception. I mean, at some point that corn's got to move, right?
And if you see a penny or 5 in a day, you're pulling the trigger.
Maybe there's going to be a little corn move to keep that market satisfied, especially with the ethanol industry out of the, they're the ones that had pumped that basis up all winter long because they were producing like crazy. Well, that goes away, and it's a problem. Is
getting ethanol back on the market going to be the only thing that's going to chew through demand in corn? Is there any other than you mentioned a little bit of China buying, is there anything else?
But I mean, it looks to me like exports, and the USDA sort of confirmed that again in this report Thursday morning. They left exports unchanged. Now, at some point a month or two ago, we thought maybe they weren't going to be able to even live up to export. So that's, to some extent, is an improvement in that they didn't cut it back. But it appears that it's going to be about what they said it was going to be. So, you have a little over 2 billion bushel old crop carryout, add a big crop on top of it, and demand doesn't skyrocket for next year. You're going to be 3 billion plus, which doesn't give you much reason to rally the corn market.
Well, maybe it can be one of those things where you're buying. You talked about buying feed for those animals, and Boyce in Montpelier, North Dakota, Tom, is asking, isn't the drop in cattle prices a normal market response to a problem, or is the investigation actually warranted?
It's both. I mean, I think the investigation is warranted. I don't know. I'm not saying that there's a problem, but why not check it out and make sure everybody's behaving themselves like they're supposed to? I mean, there's a lot of uncertainty both from the producer and from the packer, at the retail level. I mean, all across the board, nobody knows exactly how things are going to work, and they're trying to act in their own best interest and that's certainly understandable. But let's check it out and make sure everybody's behaving themselves and doing what they're supposed to.
There's 4 companies that account for 77% of the meat production in the United States. One of them, 3 weeks ago, offered to give a $5 premium per pound on the purchases they had made the week before. That was only once that happened. Is there anything like that that's going to happen again?
I have no idea. I don't know what they're going to need to do to get their hands on cattle. I think everybody's anxious that's sitting on cattle is anxious to get them moved because they're tired of the roller coaster. So I don't think it's going to be that hard to buy cattle if you offer any kind of a decent price for them.
All right. I cut you off at the end of the main discussion. Sorry, did you have anything more on that?
No.
I'm
No.
interrupting you a lot today, and I interrupted you at the end of the program when we were talking about the dollar. I didn't give you a proper time cue to respond, but we do have a question. Paul in Columbus, Wisconsin, and he's asking, Tom, why is the value of the dollar not weakening with the current state of the economy and all of the stimulus debts?
Well, you have to remember that the value of the dollar is determined by how it stacks up against every other currency. So when you do that, it's pretty easy to understand why the dollar is as strong as it is. Our interest rates are positive when other countries are negative. So there's all kinds of reason to be. We seem to be handling the virus fairly well. Our industries, a lot of them are still doing fairly well. So I think there's reasons to belong to dollar. Now I get what he's saying with the 2.3 billion the Fed pumped into it, announced on Thursday. There's some things lurking around that are probably going to be somewhat negative to the dollar. But again, all the other players are dealing with those sorts of issues too. So I think the dollar will pull back, but I think it's going to stay strong relative to all the others, which is in the long run going to tend to be supportive.
Yeah. All right. Tomm Pfitzenmaier, good to see you.
All right. Thanks.
Thanks for coming in. It's Tomm Pfitzenmaier, part of our Market Plus segment. Next week, we'll be back and we'll explore how experts are pushing an old grid system in a new direction. And Sean Hackett will join us to talk about the trends in the commodity markets. Until then, thank you so very much for watching, listening, or reading. Have a great Easter, everybody. I'm Paul Yeager.